Good Friday morning, everyone. This is Scott G with the Simple Trading Life. Welcome to our Friday edition of our YouTube live stream. Hope you guys are enjoying a wonderful week and off to a great start on your Friday. We are in our community. I see we've got quite a few people here already. That's awesome. Where you see me typing good morning down there in the chat, you can type questions, comments, anything you would like. Just like we always do, we'll start with the S&P 500, the E-minis. We refer to it as ES. And then we'll move on and we'll look at forex and we'll look for possible scalp trades, and we may take a few live trades. We'll just see what we find. The question came up in my room yesterday, and I can't remember if it might have been a private DM, direct message, but the question came up, the strategies that I am teaching, especially right now, we've been really focusing on what I call the EMA3, or the equal moving average trend trading strategy. Because we've primarily been looking at it on forex, a lot of people have been asking, is that only a forex strategy? Absolutely not. It's for anything that you trade, any financial instrument. So it could be the futures that we're looking at here. It could be equities. It could be forex. It could be metals, gold, silver, platinum. It could be commodities of any kind. The strategy works on any time frame and on any financial instrument. So just keep that in mind when we're doing teaching. When I teach something, I only teach it if I feel that it works for everything. A strategy is not really a good strategy if you have to have all these conditions of, well, you know what, it only works on a 1 hour time frame, or it only works on equities, or it only works on a 5-minute time frame for forex. Those really aren't good, high quality strategies. If you have a strategy that truly gives you an edge, it should work on any time frame and on any financial instrument. Excuse me, I'm a little bit parched. I just got back from walking 3.5 miles, so got me some lemon water here. Get the energy going. I don't drink much caffeine to begin with. I have 1 cup of coffee a day in the morning, and then that's it. And I try not to drink pop or soda. And if I do, it's usually sugar-free, like Coke Zero or something like that, but that has caffeine in it. But I'm probably going to try to cut out most caffeine and get back to as clean a diet as I can, just because it really helps with your mental acuity, and you get rid of that brain fog. So anyway, I see we got several people already in the room. I was just trying to give everybody a minute or two to join us. As you can see, I'll go ahead and get started here on ES. We're on our normal 30-minute chart. And as you can see, I posted this in our community right before market open. I warned everybody, I said, watch price closely here because we're in a contracting range. What is a contracting range? It's just what it sounds like. See how price moved down, back, and it's getting quicker and quicker and quicker. Smaller movements, energy's building. Look how the EMAs have all smashed together. We talked about that yesterday. That's energy building, and it's going to release at some point or the other, either up or down. Now, as you can see, we're getting this strong move to the downside. The strong move to the downside is actually, I'm going to say it was somewhat anticipated, because what did we have last night and this morning? The big boys reported, right? Most of the big players, or I shouldn't say most of them, but a lot of the big players reported. It was like Facebook, Amazon, I think it was Google, I can't remember who else. Maybe PayPal. I'm just going off memory. But anyway, pretty much everybody beat. Everybody beat earnings, right? Revenues were up. And so a lot of people were thinking, because we're getting back up into that territory where all-time highs is not that far away, a lot of people on Twitter were, man, it's just going to rip today. And it still might. It still might. But look what they're doing early, right? They're flushing it early because they know all the retail traders thought the market was going to go up as soon as the market opened. So what do? They take it the exact opposite way. Now that's not to say we might come down here and we might, get near a support level and then just absolutely bounce and rip the rest of the day. But what they're trying to do is they're trying to catch everybody who had already went long or went long right at the open thinking price was going to ramp. So you just have to understand how the markets work, right? Big money controls everything. So if they, I use this expression, if they think they've caught you leaning, right? They've caught you leaning one direction or the other. And when I say you, I'm talking about retail traders in general. If they think they've caught you leaning, they almost always try to trap you, right? A lot of the time. I'm not saying 100% of the time, but a lot of the time. I mean, it's high, like maybe 85, 90% of the time. If they think retail is leaning one way or the other in a big way, they try to trap you. So everybody, I shouldn't say everybody, but almost everybody retail-wise that I saw this morning was expecting a big rip. So what do? They flush it down. Now we could expect, and we got it, we could expect that we were going to see some sort of a pop one direction or the other, right? I even posted that in our community. If you've not been to our room, go to simpletradinglife.com and click on that free chat room button. Join us in the free chat room because everything's 100% free. But I posted in there this morning that with this contracting range, I expected to see a pop one direction or the other. In fact, it was the last post that I put right here. Somebody was asking me about a specific range. You can see I'd already warned everybody right here. You can see I warned everybody we were in a contracting range. A question was asked about a specific range, and I said, no, not necessarily. Contracting range means energy is building, and price will most likely pop one direction or the other fairly soon. And what happened? Boom. There it is. Right? So, like we say on our website, trading is not rocket science. If you stick to the simple, easy to understand basics, you can fairly easily read the market, read price action, and know what's about to happen. Are you going to specifically know which direction? No, right? And you don't need to. You know it's going to pop one direction or the other. So if it breaks out this way, you're looking for your short, and then you start picking out targets. This may be target 1. Okay, this is maybe target 2. Okay, we call them take profit targets, TPT, take profit targets. Right? So maybe this was target 1, this was target 2. Right? We haven't got to target 2 yet, but we easily made it to target 1. And maybe you got down here and price started to pull back and you just exit and you take what you got. So if you take it on the break, let's see, that was 54 and it's been as low as 40 and a half. So that was $13.50 move just down to where it was. Okay, and it still may go lower, right? Or at any given time they could turn around and try to ramp it. Hey, good to see you. Josie, right? I said Jose last time, and I think you made fun of me for saying Jose. Is it Josie? Just give me either a thumbs up or thumbs down. But he's in our room. He's in our room. So welcome this morning. And I see we got a few more people joining us. Make sure you give us a thumbs up. Smash that like button for us. Subscribe to the channel, and definitely turn on your notifications bell. So right now, all we're doing is watching this initial movement on this first 30-minute candle of ES. It'll be ending here in less than 5 minutes. We will be transferring over to forex, and we're going to start looking for some potential scalps there. Last night, during the night, I took 6 of them. 6, and was 5 for 6, and the one that I didn't win was actually a 0-0-0 break-even trade, but obviously you're losing just a little bit with the spread there, but it was a great evening, just having some fun, taking these little scalps this morning, 1 for 1 so far. Real easy, high probability trades, all based on our EMA3 trend trading strategy, which we're going to continue to go over. Everybody seems to really like it. Got some newer people in the room that are starting to use it. Got some people who've been using other strategies that are like, wow, that's really easy. That's really easy. All I got to do is follow the rules and then take a trade and just manage it, right? That's all you got to do, right? That's really all you got to do with anything. It's just that some strategies have a little bit more of an edge than others. Haha, he says yes. So it's Josie. It's Josie, not Jose. I called him Jose one of the first times he was on here. It's Josie. So, and he lives in a absolutely gorgeous area, a gorgeous part of the world. He occasionally puts some pictures in our room of where he lives, and it's just absolutely amazing, the views that he has. Okay, sorry for drinking so much. I'm just absolutely parched after walking. It's really humid today here in Atlanta, Georgia, where I live. Okay, so we've got a little less than 3 minutes. There he goes, countryside of Portugal. The countryside of Portugal. Okay, so you can see we're still down here. We're below this pivot, right? Fairly easily broke below that pivot, and it's holding so far. Now we'll see if it holds on this close of the candle. You see how it's starting to work its way back up. What's really important is where a candle closes, not where it gets to, it's where it closes. Right? There's a lot of people that'll, well, hey, we got all the way down here, and maybe I'm just making something up. Let's say it gets back up to here and kind of closes up in here somewhere. Okay, that is, we've created a range, right? But that is not as bearish as if it closes down here below this pivot. If it closes below this pivot, that's more bearish. Okay, you just got to remember these things as you're trying to determine whether you're going to take a trade. Now this morning, as we were in this contracting range, which started last night with the overnight session, right? You see how we came and we went all the way down, all the way back up, all the way down, all the way back up, all the way down, went back up to the top. This is where we opened, and then we got the flush, right? What did our EMAs do overnight? Okay, they went from being really wide to completely flat. That tells us, okay, unless you're sort of micro scalping the market, okay, and you wouldn't want to really do that on a 30-minute time frame. We're on the 30-minute now. You would go down to a 1, a 2, a 3, or maybe a 5. Okay, unless you were micro scalping and trying to catch those smaller moves, you wouldn't want any part of this. All right, you guys remember my terminology. I call this being tangled up. Right? Price is tangled up in the moving averages. But what you do want to do, and that's why I warned the room this morning, is you want to be ready for the breakout because you're going to get it. You don't know the magnitude. Okay, here's where we close. Look at that. Right level with the bottom of the pivot. So they're really trying to confuse you, right? Okay, first move is to the downside. Right? It's a lot easier if it closes up here, closes down here, and they close it right there at the bottom of the pivot. Okay, but they're starting to go red first. We'll watch, right? That could just be a fake out and then take it back up the other way. But we're going to pay attention. All right, so again, you really, if you're trading the 30-minute or the hour or something like that, you really don't want any part of this. Look at this. Just chop, 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 back and forth, right? Green, green, doji, red, green, green, red, red, green, red, green, green, red, red, green, red. Okay? You don't want any part of that if you're trading on some higher type time frames like the 30-minute or the 1 hour. Okay, starting to go red again. We'll watch this just a little bit before we start looking at forex. We'll see if they're really going to try to trap the retail longs, right? So you guys, I see there's a few more of you who are joining us since we first started. We were talking about why, with all the positive earnings reports on all these big players, why did the market flush down at market open this morning? Again, that is big money trying to trap overzealous retail traders, because they know all the retail people are seeing those earnings reports come out on Amazon and Google and Facebook and all these other big names that have reported last night and this morning, and they're like, oh yeah, as soon as market opens, boom, we're going to the moon. Well, they trap everybody, right? They flush it the other way, and at some point, as price starts to move this way, all those retail people get freaked out and they just start unloading, right? They start unloading. And big money, we're going to see, right? Are they only just going to kind of take it out in here and then turn around and reverse it and then maybe rip it later in the day? That's very possible. But if they get retail out of the way, and what I mean by that is as price drops, okay, there's always what? If somebody's selling, there's always a buyer, or vice versa, right? If somebody's buying, there has to be a seller. So if they're flushing it down and they're trapping those retail longs, what we mean by that is at some point those retail traders start unloading their longs, right? Because they bought to go long, they'll start unloading them down here for a loss. Well, then what happens? Who's buying it as they unload it down this way? Who's buying? Okay, we call it smart money, right? It's the big money. It's the institutions, the banks, the hedge funds, the prop desks, the whales, right? The people who are buying at a value. They're the ones who will buy as retail starts to unload. Now, how low are they going to try to drive it, right? Well, we know that there's a level right through here. That's why we have this 32, 38, 50 level. If it breaks, right, and we get below these, okay, then here's our next level. And if this breaks, we could get clear down in here. Clear down in here. Now that's if they really want to punish retail, right? If they really want to punish them. And then what'll happen, and I'm using that term loosely, right? I'm being sarcastic. If they really want to drive it way, way down here, then what will happen? Okay, I'm telling you right now, what would happen if they try to drive it way down here? Retail will come back in way down here near the bottom, and they'll start selling, right? They'll start going short like crazy, and then what will big money do at that point? They'll turn around and they'll bounce it the other direction, and they'll trap them short. That's the game that is played out every day, every week, every month. That is the game that is played. Okay, there we go. We got a touch. You see that? Right at our level. Look at that. These lines have been here all week. I adjusted them on Sunday night, and they have been here all week. And look at that. Boom. Right off the line. It came down. You can only see this when you're watching in real time. It went right to the level and bounced. Now it may break through, right? And if you weren't watching in real time, let's just say it breaks through, you'll think, oh, it just went straight through there. No, it got here, it touched that level, and it bounced. Why? This was support at one time, and when you break through and you come back to retest it, it's resistance over here. And when you come back to retest it, typically it's going to be support, right? So it's acting as support now, but we have strong momentum to the downside. Let me put this in for you if I can. There we go. We have strong momentum to the downside. All right, so we were trending down all night. All night. There's where the market opened for the overnight session. We were trending down all night, and now we're really moving down. And if we get below here, which we're starting to, okay, our momentum indicator, if it gets below 40, that's saying that the momentum is really getting strong to the downside. So we're going to see, our bull's going to try to step in this area right here and drive it back up? Or are the bears going to have enough strength to push through this area right here? They'd have to get below these two wicks. I could even do this for you. Give me a second. Just to give you a visual. I'm going to give you a visual here, because visuals are our friend. Okay, I'm just putting it, that's the bottom of those two wicks. So if it breaks this level, then it's got to kind of get through here where all this congestion is, and then could drop to here, and if it gets through here, it could very easily drop to here because there's not much that could stop it. In terms of candle structure over here, there wouldn't be much that could stop it from getting down here. All right, so let's do this. I'm going to set an alert about right here, and then we're going to go over and start looking at some forex. So let me just set this. So if that alert goes off, we'll know that price is really dropping, and I'll put one above it so we know if price reverses. And then we'll head on over to Trend Spider. Now we've got our alerts, right? So if price goes one direction or the other. So now we're going to head over to Trend Spider. And we'll start with Euro USD. Last night it was Aussie, I think it was Aussie USD and Euro USD that I was finding success with last night. All right, so what do? Right, we know, and right now we're on the 5 minute. Does anybody have a time frame they want me to look at today? Because I'll look at anything. We did the 1 minute on Monday, we did the 2 minute on Tuesday, we did the 3 minute on Wednesday, and we did the 5 minute yesterday. So we could either do one of those again, or we could use a different time frame. It really doesn't matter. But I am primarily looking for scalps, so it's really got to be like one of those time frames. Okay, because we're primarily looking for scalps. Yeah, 5 to 15 minute. Why don't we just stick with the 5 for now? We'll just stick with the 5. All right, now, so we look at the bigger picture. We were trending up, right? And then what happened up here? Okay, what happened up here? We sort of hit a plateau. This spiked up, and then we started to fall. Look at this break, retest, and go. Okay, we talk about the patterns that play out a lot. You see that? Okay, we broke above, we came back, and we broke through. We retested the level that we broke, and then boom, big drop. Okay, and our strategy plays out nicely there. Right? We're not going to look at those. We're going to be looking for new trades. But then we got down to this level, and look at this. Again, look where we stop. Well, that's because we have a level of structure right here. Then we bounce, right? So as we're dropping, look how we dropped. We went lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high. Then we made a higher low, and we kind of based here. Then we dropped and made another lower low, and right now we may be making a lower high. So now let's scroll back in, right? Let's scroll back in. Now, right now, we got to go through our checklist. So first of all, where's the trend? It's obviously down. Okay, the second thing, so that's our check mark. So our second thing is price below the trend? No, it's not. So that's an X, right? That's an X. Do we have above average volume? Yes, that'd be a check mark. Is momentum up or down? The trend is down, but momentum is up. So that's an X, right? And then is the 10 below the 20 and below the 30? Yes, but look what's happening. Everything is curling back up, right? It's curling back up. So what we're going to watch for, and I want you guys to watch this. I'll draw it in for you. You got to see this with your eyes. You got to see this with your eyes. And if it helps you, just draw it in like this. All right? Look at this level of structure right across here. If price is going to reverse, make a lower high, and come back down, this is where it's going to happen. Why? Well, look. See this right across here, right? Then right across here, and then right across here. Right? This is a level of structure right here. If you're going to reverse with a lower high, so here was your last high, this would be lower. If it's going to happen, it's most likely going to happen right here. If you broke through here, it could potentially happen up here, right, where this level is. But this is a highly probable area for it to occur. So if it does, then what are we looking for? We would be looking for price to get back below the 10, and we would look for this to curl and start moving back down, right? That is when we would be interested in a trade. We're not interested right now. Okay, we don't have enough. Now, in the room, I've been telling everybody, I gave the 6 factors. I showed everybody yesterday in my room, in my feed at simpletradinglife.com. A high quality trade, 6 for 6 or 5 for 6. You can take 4 for 6, but now the odds are starting to decrease, right? Decrease. So I like these trades if I have all 6 or at a minimum 5 for 6 of the factors. Right now, we only have 4 for 6, and price is moving the other direction. But we can notice, we'll come back to this, we'll notice here, does it reject here and start to go back lower? And if it gets below the 10 down here, this starts to curl back down, this starts to curl back down, and everything else stays the same, then we would be interested, right? All right, so yesterday we started at the bottom. Today we're going to start at the top of these forex pairs. All right, so now we're looking at the Aussie yen. So the bigger picture was we were chopping, and then look at this upside move that we've made. Okay, pretty nice upside move. So let's come over here. Let's go through our checklist. Trend is up. Is price above trend? Yes, it is. Do we have above average volume? Yes, we do. Is the 10 above the 20 and the 30? Yes, it is. Is momentum up or down? Okay, you can come clear back to here. Okay, clear back to here and it's up. I'll draw it in for you. So this is a check mark, but I just want to show you how you do this if you're doing this on your own. All right, look at that. So trend is up. That's another check mark. Are the EMAs widening? Yes, they are. Okay, yes, they are. What is the only thing? I want you guys to start getting really, really good at this. What is the only thing that we're worried about right now? Okay, what would we want to do to make this a good, high-quality trade? We want to see price, because it's getting extended from the 10, we want to see it pull back, and your entry would be on a pullback and then price starting to go higher, right? You don't want to buy when it's extended. Let's scroll back in. Okay, see, we talk about it all the time. You guys get used to seeing this. Okay, so look at this move. We get away from the 10, we pull back. We get away from the 10, we pull back. We get away from the 10, we pull back. We get up here, we pull back. We get up here, quite a bit of ways, and look at that, we pull right back. Now we're getting really extended. What's something else to notice about this move? It's getting stronger. It actually started with smaller impulses, and the impulses are getting bigger and bigger. Now somebody may say, well, that's awesome, so I'm ready to really jump into this. Not so fast, right? When they get bigger, the longer a trend goes, then you really got to start worrying about exhaustion. Okay, and we know if price exhausts, it can go against you in a hurry. Let's see if there's anything in the recent past that we need to worry about. Okay, nope, that is actually lower. There we go. All right, so if we were looking for a trade here, I'm not saying we can't take one. We could, absolutely. If price pulls back to the 10 and then we get a buy signal to the upside, absolutely we could, because we're only looking for scalps. That's all we're looking for right now. Okay? So if somebody's interested in this, you can just keep paying attention to it. Maybe put another screen on your monitor, or a little window, I should say. And if you get a pullback, or if it just goes sideways and lets the 10 catch up, and then you get some sort of a buy signal. What kind of a buy signal are we talking about? All right, let's just say that it goes across here, it chops, and the 10 catches up. You would just draw a line right across the top, and then if price broke through that, that would be your entry. Or it comes over here and it starts to come back, and you get a hammer, which means we push down, bounce up, we have a long wick or a long tail or shadow, however you want to call it, right? Then when you break above that, you could look to go long, right? There's a lot of different things. You could get These smaller candles, and maybe they'll start to either go sideways or trend down, and then you might get a bullish engulfing. That could be a signal to go long. Okay, you just want to have an entry reason. You want to have you don't want to just enter for the sake, oh, we touched the 10. We touched the 10, so I'm going long. No, that's not how you trade effectively. Okay, all right, so let's go to Aussie Kiwi. Okay, this is all on the 5-minute. Let's go out to the bigger picture. So in the bigger picture, we came from a downtrend, right? Then we chopped a little bit, we came up, we came down, and now we're moving up again, other than this big drop right here. Okay, we're moving up again. So let's take a closer look. Now, immediately as you start to see things, draw them in. Is it potentially that we just double topped? Okay, potentially, right? Potentially. So we just got to know that. What's the trend? Right now it's to the upside, but come down here. Now, from here going up, we're still trending up. Draw it in if it helps you. Okay, we're moving up here, right? But other than this little spike, if we did this, it's been pretty flat, right? Pretty flat. Okay, so what we want to guard against here is, have we double topped, right? Have we double topped? If we have, then price might start to turn to the downside. But let's look at some other things. Is price above the trend? It is, right? Is the 10 above the 20 and the 30? They are. Do we have above average volume? Yes, right? Not on this one candle that we're looking at right now, but it's starting to come up. But yes, look at these candles. Right? Is momentum up? Yes, it is. Are the EMAs widening? Yes, they are. What is our only concern? A potential double top, meaning that this level here could be resistance. Now, if it comes up and breaks through here, then we have the potential to go higher. Right? Then we have the potential to go higher. So for me, the higher probability trade, if I'm looking to go long, because this isn't giving me much. Let me grab my ruler. Watch this. That's only giving you about 2 or 3 pips, right? For me, that's not enough to enter. That's not enough to enter. Like if I had a high quality probability of getting, 6, 7, 8 pips, yeah, I'll take that, right? I'll take that because we're looking. Hopefully, we're looking for 3 to 1s or at a minimum 2 to 1. And now look what price is doing here. It's starting to fall, right? So that's why I said sometimes you can look at this stuff and say, oh, it looks like it's all in my favor, right? But what is the bigger picture? Okay, that's why I drew this in immediately. I drew this in the first thing. My eye immediately went to that. Did we just double top, right? We may not have, right? Price could come back up through, and that's what I'm saying. If it broke through here, then I think the likelihood is stronger that we're going higher. But that's what I would want to see. All right, Aussie USD. Let's go to the wider picture here. Okay, so last night, this is one of the reasons I liked it. Look at this. Look how we were moving up, moving up, moving up, moving up, and then finally, now we're starting to move back down. Right, so last night, this was easy to trade. It was easy to trade. You see this? Look at that move, right? And again, look at how price moves. It comes up, it pulls back. 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 You see that? It's going to happen over and over and over again. And to the downside, it's the same thing. Pulls down, comes down, pulls back. Comes down, pulls back. Comes down, pulls back, comes down, and this time it pulled all the way through, but where did it pull through to? Right here, you see that? Now it's coming back down again. All right, so that's the bigger picture. In the more near term, right, trend is down. I can already see 1x. Are our EMAs widening? No, so that's an X, okay? We're trending down. Is price above or below the trend? Okay, it's below now, just barely, right? And it may be going to reestablish. Is trend up or down? Right now it's up. Okay, right now it's up, so that's another X. Okay, so it's up currently. We do have our above average volume. Do we have any obstacles in our way? This wick, potentially, right? Potentially this wick. And then let me look. Come over here. Okay, so we do have, you know, you could get into this wick and still make 6 or 7 pips. I take that back. You wouldn't be entering actually until these curled and moved down. So no. So we are going to have a 3 strikes and you're out on this because the EMAs are not widening. In fact, the trend is down, but the EMAs have moved up and flattened out right now. That'd be an X. And you see how they're all smashed together right now. So the 10 is actually above the 20. That's an X. So we're not interested yet. Now, if it curls, right, and see how it's curling here, if it curls and we start to get the EMAs widening again, then we're interested. And you got to know you have this pivot down here too. You have to know that you have this pivot. Okay? So you see how selective we're being. It's not, when you're scalping, there's so many people, they have the misconception that because you're scalping, that means you're just jumping into trades left and right. You're only jumping into them if they give you a high probability. Last night on Aussie dollar and Euro dollar, it was so easy. That's why, you know, over the course of 2-3 hours, whatever it was, I took 6 trades because both of them were trending up with nice smooth pullbacks. It made it really, really easy, right? This is not easy. You don't want to trade this. See this in here? Let me draw some lines and then I'll just get rid of them. Okay, you do not want to trade this, right? You don't want to trade this choppy stuff, not with the strategy we're using. If you want to trade a range bound strategy, yeah, you could try to trade this. I'll bet you, let's look here, 85 and 68. So what is that? Is that 17? Is that right? Let me look. No, 7. I'm sorry, 7. These are 7 pips apart. Okay, is that enough for you to trade a range-bound strategy? For me, it wouldn't. I would want them to be about 10 or more. Okay, and let me tell you why. Where are you going to enter if you're doing a range-bound strategy? Once it starts back the other way, well, that's taken a couple of pips. Then you have to add the spread in, right? And then you're probably going to exit just before it gets here. So if you only have a 7 pip width here, you're never going to get 7 pips if you're trying to trade range-bound strategies. Follow me on that, right? Because you're not going to enter here until maybe right there. Okay, so you've already given up a pip. And then you have your spread, and your spread may be 1.5 pips. So now you've given up 2.5 of your 7 already. So I hope you're following me on that. And then you want to put your stop up here above this. So then you're not getting great risk to reward either. All right, let me remove these. Wow, look at the drop though. Look at the drop. And you will miss some of these, right? Because we're only taking the highest probability trades. There was nothing that told us this was going to occur in the next minute or two. You can't guess, right? You can't just be flipping coins and rolling the dice. If you do, you're not going to make any consistent money. But now we can watch this, right? We can watch this because now, look, now the 10 is below the 20 and the 20 is below the 30, and they probably are going to start to widen. We got our curl. We're above average. We're below the trend. Everything is in our favor now. The only thing we're looking for, right, we know this pivot's down here. Okay, the only thing we're looking for is, are we getting too extended? Or are we going to get a pullback? Man, it's really going. I wonder if there was some kind of news or something that came out. Not necessarily, right? This really isn't that big of a move in theory. Okay, it's really coming down though. So I'm just trying to look. If enter there, we're not. What would that still have given you down to just below there? About 9 pips. So there was like a 9 pip potential if you would have entered across the bottoms of these bodies, because now we're widening, everything else was in our favor, looking for a target just above the bottom of that pivot. We'll see. We'll watch it for just a minute or so. We'll see if it gets there or not. I'd be a little bit concerned that we're going to get a pullback, because really it started up here. We've come all the way down here. At some point, we'll probably get a pullback closer to the 10 and then a further move down. But if we break this, oh yeah, if we broke that, I would be really interested, because look, we could probably get down into here. Let me draw a line across there, because I may come back. This may be something I'm interested in shortly. Okay, so if we break this, let's see what the potential is. This is what you got to figure out when you're doing these kind of trades. The potential is 14 pips. Everybody follow me? From if we break the bottom of this and everything is still in our favor, okay, so just below this to right just above here is 14 pips. I think it said 14.7, so just round it, 14 pips. That's something I would be interested in. Move this up, okay, see that? If we come down here and take this pivot out, okay, then we're looking at a lower low. Then you come back over here, right? Look at this. There's really nothing in here that should stop price. It's until you get down into this area where price came up and pulled back and then went higher. That's where we would look for some realistic area of support. So that's how you figure these trades out ahead of time. I'm trying to anticipate, right? I'm trying to anticipate if we get down here and we take this out. Now before then, it may pull back, right? We may come down here, actually, pull back over to the 10 and then start down again. Oh, I'm sorry, Josie, you're right, because my image is over there. Let me do it like this. I'll pull it across for you. Hopefully it'll let me. It might not let me. That's what I was afraid. Oh, there we go. Okay. You guys should be able to see it now, right? So this is in line. This is in line with that pivot over there, right? This right here, where it came down and then went back up, this is in line with the pivot, okay, over here. See, price is still above it. And then if we break that pivot, we would be breaking this. Look, there's nothing to stop it until we get down here where we had a pivot and on up. So that's why I have that line drawn across here. Okay, now if I move back over, oh, there you go. Now you can see it. See this? This pivot is just below that. So if price would come down and break here, you probably see a fairly quick, and when I say fairly quick, I'm not talking about it's going to happen in a minute, right? It could be, 2, 3, 4 candles, because look how it climbed. 1, 2, 3, 4, 5, about 5 or 6 candles over there. Okay, it could drop right down to here. Josie, what's a pivot? A reversal zone, correct. Does it have anything to do with Fibonacci retracements? No. I am not a Fibonacci trader. I obviously know what Fibonacci's are. I have used them in the past years ago. I have a good friend who is a huge Fibonacci trader. Like, he only trades Fibonacci's. Okay? And he is in, when I say Fibonacci's, he is not just in retracements and extensions and all that. He's into like mathematical equations and goes back years and years and years and takes years of data and applies Fibonacci's to them to try to figure out probabilities of where price is likely to go or not go. I'm just telling you, that makes my brain hurt. And he's decent, right? And he's a good friend of mine. I'm not putting him down or anything, because that's how he loves to trade. But he puts so much time and effort in to get the same kind of trades that we get just by simply looking at price action and applying a few simple rules, right? I'm not going to spend days upon days analyzing years and years of data and trying to figure out where Fibonacci's fit into that data to try to select likely points, you know, because I've had this conversation with him before. What happens? How do you feel after you, because he's told me before, like literally, he'll spend days, hours and hours and hours analyzing years of data and trying to line Fibonacci's up with past data going back for years. And then, you know, he's trying to predict, okay, well, based on Fibonacci's, price is going to be here, or it's going to turn here, or whatever. I said, how does it make you feel when it doesn't happen? And he was like, oh my gosh, I get so stressed out because I know how much time I put into it. Exactly. That's why I don't trade that way. I tried Fibonacci's years and years ago, and I tried them on their own. I tried them in conjunction with things. So when I'm talking about a pivot, it has nothing to do with Fibonacci retracements. Pivots are just what they sound. It's where price turned, right? I'll show you. Here's a pivot. Here's a pivot. Okay, down and then back up, down and then back up. Here's a pivot, down and then back up. Here's a pivot, down and then back up. Here's a pivot here, up and then back down. Here's a pivot here, up and then back down. Okay, they show you where there's going to be potential areas of support and resistance. Right? So you just want to know where they're at. And the stronger it came in and the stronger it leaves, you see how this came in strong and then immediately reversed on a dime and left strong? You would expect this area right in here to be a fairly strong, the first time price gets there, a fairly strong area of support. And look what is happening. Look, you see? So once it gets down in here, let me grab my tool. That's a good question though, Josie, because I'm sure other people have the same kind of question as well. Okay, you see that? Anywhere in here, we came down strong, but on the drop of a dime, we turned around and went the other direction. That tells us buyers, aggressive buyers were waiting right here, and it came down strong and was able to stop that momentum in its tracks and force it the other direction. So the first time that price comes back into this area, and it can happen anywhere in here. Sometimes it'll get further down. Sometimes it'll just be like kind of up here where it is. But the first time it comes down in here, you should see some sort of support reaction like we got, right? We got a hammer. Then price went back to the EMAs, and now we might get a shooting star because we know up here there are sellers. Okay, and how do we know that? Because of how strong it just moved down. Okay, so hopefully that's making sense to everybody. This is showing that right through here there was aggressive buyers. This is showing that up here there were aggressive sellers. Now see, right now here's where the struggle is. You have two sides that both are showing aggression, are going to fight it out, and one of them will eventually win. And when that side wins, like if it's to the downside, we know we're probably going to at least see a drop to here, right? If it's to the upside, well then you got to start looking for upside targets. It could be here or it could be up here. Like if the, let's just say the buyers win and it reverses and starts going up this way. If you take out this level, then you're looking here and here, and then if you break those, you look for your next level. All right, we just keep it super simple. But right here, this is showing that there is a fight going on. Remember, we're only on a 5-minute chart. We're only on a 5-minute chart. So there is a big fight going on right in this area. Okay, look at this. Back down to it. Okay, it starts to go green first. Now let's see if the sellers can come back in or if buyers are going to drive it back up here again. We'll just watch this for a minute. To me, I love price action. I love watching price action play out. I'm getting a message right now from somebody in the room asking why is the market down when all the big stocks beat their earnings. Let's go back over here for a second. Look at this. Look at this. Remember when we left, I told you if we get through here, we're likely to get down to here, and we almost got there, and we still might. Okay, so that's the question, right? And I've already explained it. The person's probably not on the live stream because that's a message that's coming directly from the room, wanting to know why is the market down when all these big names beat on earnings. And what did I tell you? Okay, if they catch you leaning, if big money thinks retail is leaning one direction or the other, they're going to make you pay. They're going to make you pay. That's why you don't get in early thinking, okay, it's got to go up, right? It has to go up. All these big names beat. Nope, it does not have to go up. This is a case study in why you don't want to try to front run news, right? And what I mean by front run is we know the earnings came out, but when the market first opens, you jump in long immediately because you're thinking, well, the market has to go up. No, it doesn't. It doesn't have to do anything, right? What's Mark Douglas say in Trading in the Zone? You become a better, more high quality trader when you understand that anything can happen at any given time. You don't have some preconceived bias that is telling you price has to go up because of all these earnings beats, right? And these are some of the biggest names in the market: Amazon, Facebook, Google. There were others. I can't remember all of them, right? But there was a lot of big names last night and this morning that had all these earnings beats. So everybody just assumes the market has to go up. No, it does not. No, it does not. The market is controlled. Now, I use terms like manipulated, and it is somewhat manipulated, but when I say manipulated within the rules, right? There's nothing illegal about what institutions and big money and hedge funds and prop desks and all these people who control, millions and millions and sometimes billions of dollars. There's nothing illegal about what they're doing. I know retail gets frustrated. Retail traders get frustrated because they're like, oh, this is bogus, man. They're doing this and they're doing that. That ain't right. The market should have to go up because of those earnings. No, it doesn't. It does not. There's no rule that says just because we've had positive news or just because we've had a bunch of earnings beats. We are traders, right? And we're not trading on reality. We're trading on the perception of sentiment, right? The perception of sentiment. So if big money, if we know they control the biggest piece of the pie, if their sentiment is, hey, we know retail traders think it's going to go one direction, we're going to force it to go the other way, you've got two choices, right? So remember this, everything in life is a choice. You can either gripe and complain and say this isn't fair and, big money is controlling everything and blah, blah, blah. You know what? You're right. So instead of fighting them, trade the way they trade. Anticipate that this might happen. Some of the best trades I've made in my life is when I anticipated that everybody thought something was going to happen and I went the other way because I thought big money would go the other way too. Now, I'm not talking about front running it. I would wait, obviously, until I start to see the move happen, and then that confirms that I was right. Okay? And those are some of the best trades I've ever made in my life. When 90% of the people in the market, retail, thought something was going to go one direction, and I anticipated in my head, knowing big money knows that, big money's probably going to take it the other way. That's just smart, right? That's just smart. You need to think like they do. There's videos, you can find them. You can YouTube, search on YouTube or Google, and there's videos about how to think more like institutions and hedge funds and prop desks, right, that control the majority of the money. You want to think like they think, and then you'll make more high quality trades. All right, let's do this. I might as well take this off. For whatever reason, my thinkorswim alerts are not going off like they normally do. I mean, they're triggering, but they're not like ringing in my ears, and my volume is up, right? Yeah, my volume's up, so I don't know what the deal is. All right, look at this. We're actually starting to get a shooting star forming. We've got a long time left on this candle, but this candle may turn red and just keep going. It may keep plunging. Let's watch it just for a minute or so, and then we'll go back over and look at some more forex. I'm hoping we can find a good trade to take over there. But when I'm on with you guys, my priority is teaching and education. If we happen across a good trade that we can jump into live, then we'll do it. Just watch here just for a second or two. Okay, now it's starting to go green again. It came clear down here. I thought maybe they were going to start flushing again. So let's go back over. All right, okay, so let's pick back up. We're back on the Aussie US dollar, and look, they still can't get through here, right? And then when it gets up here, what happens? They push back. What are we starting to form? I hope you guys can see this. You'll start, if you guys stick with me long enough, you'll start to see this. Okay, what are we starting to form? I'll draw it in for you. Okay, we're starting to form a contracting range. Contracting range, okay, our EMAs have come together and flattened out, right? Because what were we doing? We were trending down. Now they turn sideways because we have this big struggle in here. We've got this big struggle going on. And what is a contracting range? It's when the range gets smaller and smaller. And then eventually it breaks one direction or the other. So we're watching. Let's just watch this for a second. We'll see if anything happens. If we come down here, okay, trend is sort of to the upside. And we're talking about in the relatively recent past. Okay, trend is to the upside. And how do we know that? Because we came from outside of this neutral range back into the neutral range. See this? We were clear down here at about 28, and now we're back at 51, which is right in the middle. So we came back into this neutral range. That's how we know it's up. That's how we know it's up. Okay, so here we go. Now bulls are trying to push here. Okay, bulls are trying to push. I'm not interested in the trade because you see the market sideways and all of our other factors aren't met. All right? I only want to take trades when 5 or 6 of those factors are met. And could I miss something? Sure, right? This thing could blast out of here. Now, if you're trading a breakout strategy, right, you wouldn't even be worried about these EMAs and stuff like that. All you'd be looking for is a strong break out of here. But right now, we are concentrating on this EMA 3 trend trading strategy. So I need to follow those rules. And so do you if you're trading it. Okay, so do you if you're trading it. Okay, right now, it's trying to break out. Okay, kind of got stuck there. It's not doing anything, and now it's starting to reverse again. On these smaller time frames, you'll see things happen. Like if we were on the 1 minute, almost like a ticker tape, right? But the 5 minute, I like the 2 and the 5. If you're just looking for scalps, the 2 and the 5 are kind of ones that I like. There's nothing wrong with the 1 or the 3. Okay, the 3 is fine too. Some people like the 3 because it's a multiple. 3 is a multiple of 15, and it's a multiple of 30, and it's a multiple of 60, so on and so forth. So some people like the 3 minute because of the whole, multiple thing. 2 is a multiple of 10, the whole numbers, but 3 is a multiple of also those odd numbers. So like the 15 minute and the 30, the 60, and so on and so forth, the 90, Some people use the 90. I've never been a fan of that. Okay, turning around. You see this? Turning around. We couldn't sustain the strong break. Now it's coming back. So this struggle is still going on. So I hope you guys are getting an idea of why you don't want to trade in through here. You don't want to trade in through here because you're just going to get chopped up. You're just going to get chopped up. Okay, I want to keep moving. Let's go to euro pound. Okay, we just saw the bigger. Now I drew these lines in yesterday or the day before. These are support and resistance lines. Okay, so overall we've been moving down. That's the bigger picture. Then we kind of came down here, came back up. We put in this double top right here. Okay, put in this. And now it's coming back down, coming back up. So let's go through our checklist. Trend is what? Down, right? Is price above or below the trend? Well, it's above the trend, so that's an X because the trend has been down. Is the 10 above or below the 20 and 30? Well, right now it's the same as the 20, so that's an X, right? Are the EMAs widening? Nope. That's an X, so it's 3 strikes and you're out. Trend is down, momentum is up, that'd be another X, right? So you're going to see, we're going to probably see this big move here, but it's not a trade that we're looking to take based on this strategy. Okay, now if somebody was trading some other sort of strategy, they might be looking for it to get back up here again. Why? Because this line has acted as resistance all the way through here. Okay, but we're going to keep moving, right? Because if you're actually doing this in real time, okay, once you get to 3 strikes, you just move on to the next thing. Euro yen, okay, bigger picture is to the upside. After we consolidated for a long time, now it's an upside move. Ooh, look at this. Pull back to the 10. Okay, pull back to the 10. Trend is up. Is price above trend? Yes, it is, right? Is the 10 above the 20 above the 30? Yes, it is. Are they widening? Yes, they are. Check, check, check. Okay, is momentum up or down? This is the only thing that makes me a little bit nervous. It's ranging. Even though the market's moving up, look at momentum. It's ranging. Right? Now, you could come back over here, but that was way down here. I would maybe come back to about here, and yeah, it might still slightly be up, right? Okay, so we'll give it, just barely, right? But we're bouncing here, okay? Is this one we might want to try? Everything is really in our favor. What was that one? Yen, euro yen. Let me see if I can find it. Guess I could just type it in, right? Euro JPY. Okay, there's Euro JPY. We're bouncing. Above average volume. We're barely going up. If we were going to buy, we would go buy. And let's see. And just start with that. Submit. Okay. Now I would adjust slightly. Whoop, what did I do? Okay. Somehow I hit the grab tool. Let me stretch this back out like this. There we go. I would want this just below there. Okay, and here we go. Let's see how it works out, right? Let's come back over. Was there anything over to the side? I'm not really seeing anything. Okay, we know to go higher, we have to get above here, which is 125.21.3, so 213, 125.213. So I could just watch that right in here. I want to come back over here. I like to do my analysis over here. Nope, Nothing in the recent past that we're really watching. So I said 125, 213, and that's the break here. Okay, so we'll see. Okay, let's just watch all of this play out, right? So trend was up, price was above the trend, 10 above the 20, above the 30, EMA's widening, above average volume, and then momentum ever so slightly. That's the only thing here. I said I'd give it like a minus, ever so slightly to the upside, but it is in the stronger momentum territory. Okay? We would have to break here to go higher, And we might, you know, we'll just watch. We might just be real conservative with this. We'll see what happens. Okay, you look right here. Okay, we're in profit right now. We're looking to see, I'll see where it's at when it gets up here, if it does. Okay, but we got to pull back. So if we're going to continue the trend, right? If we're going to continue the trend, now it's pulling back a little bit. So here's the move. It started down here, right? We went from flat to trending up. So we went up, pulled back, up, pulled back. Well, actually, we went up to here, went sideways, up, pulled back, up, pulled back, and now we're seeing if we're going to continue the trend upwards. Okay, we may or may not, right? Because once you get so far into a trend, eventually the trend will come to an end, and it usually comes to an end with a double top or sometimes a triple top, but we're just going to watch this play out. You see, every time it gets up here into these wicks, it pulls back down. And we know where our stop is. Our stop is right below this candle. So we don't care. I mean, one way or the other, we don't care, right? It's either going to work in your favor or it's not, but everything is defined, right? Nothing can hurt you, right? Nothing can go against you that's going to hurt you. The only thing you have here is the potential for some upside, right? If it goes against you, so what, right? Because we have a small defined risk. You should never, ever enter a trade without a small defined risk. Now, somebody may say, well, what if I'm swing trading and I'm looking for a long trade? Well, that's one of the downsides of swing trading long-term trades, right? Because you do have to have a wider risk on those. Okay, so I'm just not a huge fan of that. I'm not a huge fan. Okay, so it's pulling back. It's pulling back. Let's see what happens. Okay, let's see if we get a bounce or if it continues to pull lower. Okay, so we, if I come back over here, there it was. It just took it out. So we just stopped out. Okay, see, because we had our stop right there. We just stopped out. That's weird. It seems like this, even though it says real time, is lagging. There we go. See, it's lagging slightly behind over here. That's interesting. All right, so it didn't work, but we had a small defined risk. Okay, and when I say small, okay, right there. That's all, right there. Okay. So we knew there was nothing that could hurt us. We took our factors. However, the only thing I said, right, was that you have to understand when you have this big move up like this, at some point, it's got to end, right? And so it's like rolling over, it looks like, and trying to go lower. And I did not like the momentum down here because it was just slightly, I mean ever so slightly up. That was the only thing I didn't like, and now you can see we're starting to break down. Okay, caught a little bit of support right there. All right, but we just keep moving on, right? So now let's go to Euro USD. We go to Euro USD. All right, and we come back in here. And we see where we're at. We're still doing this choppy sideways stuff. Okay, still doing this choppy sideways stuff. So we're not super interested right now. Okay, not super interested. Man, there we go. I'll bet you, let's come back over here. Okay, maybe not. I was going to say, I'll bet you that the market was starting to go lower too, but it's not yet. Because we're seeing a lot of these things starting to drop all at once, right? Come back over here. See that? See how that's dropping? Okay, that's dropping. Let's go to, this is pound yen. Look at that, it's dropping. GBP USD, it's dropping. They're all dropping right now. So something is causing this. Something is causing this. Okay, and because of that, now, all right, now, here we go. Here's one. The Kiwi yen, we have no like movement in it in terms of it's not dropping like everything else was. Let's look at Kiwi dollar. Kiwi dollar had a big flush. See this? See this super huge long wick? Big flush, and then it came back up. This one, I might be interested in watching to see, because this came down, see how this is held down in here? I'll show you what I'm looking at. Okay, see how this is held down in here every time it's been down to test it? And here we had this big flush, and then it bounced way back up. Now it's starting to go down again. What I was going to say is if we start to see this curl up, right, because momentum has been to the upside. Momentum's been working up even though we've been in a range. Remember, we're trying to look for clues that might tell us that something else is about to happen. Okay, so that's been up. Now it's starting to curl back down, and it's held here every single time, including this would have been a huge red candle just a minute or two ago, right? A couple minutes ago, and then it bounced it way back up here. It's starting to bounce again. What I would be interested in is if we see this start to curl, because we got momentum up, we have above average volume. Okay, here's your 10 starting to move back up above. We want to see this, the 20 get back up above the 30. All right, what is this one? This is New Zealand US dollar. Okay, let's watch this for a second. Let's see what happens. There's obviously a struggle right through here. Okay, there's a struggle right through here, and there's something in the something around the world is causing a lot of these currency pairs to try to push down. There's only been a couple, right, that we just looked at that weren't just all of a sudden starting to go down. So there may have been some kind of news come out or something like that. At this time of day, it wouldn't have been anything scheduled. Now, the European market, okay, remember this, the European market, I believe, when I say European, the London market just closed. So that could have something to do with it. Everything, you know, those drops were because the European market, the London market was just closing. It closes at 11 a.m. Eastern time. So now let's see, okay, that tried, right? We've had all this pressure here over the last, let's say, half hour trying to go to the downside. Now let's see, do we start to see a reversal, okay, because we were trending down, right? You see this? Down, pullback, down, pullback. Down, pull back, down, and then this right across here, let me put a line in. Other than that one spike above, You see this? You see how price has been respecting this? Okay. So you want to know what's going on. You'd like to see price get back up above here. You'd like to see these turn to the upside. This is something I'll be watching when we get off of here, because we'll be getting off of here in a few minutes. This is something I'll be watching for. If these turn and start to go this way, they start to spread, and we still have above average volume, and momentum is still to the upside, somewhere up around in here would probably be a great long. Okay? So just, mark that down on the Kiwi dollar, New Zealand dollar, right here, NZD, USD. So this would be my kind of line in the sand that if we could get above that and all the other factors were in my favor, I would be looking for longs that direction. All right, let's just look at a couple more and then we're going to wrap it up for the day. Here's dollar CAD. Okay, see the big drop. Again, this had to have been... yeah, that was 10.55. That was a 10.55 candle. I guess all of this was right before London close, because you can see, look at the candles. And then all of a sudden, boom, big drop, right? Big drop. That was dollar CAD, and then here is dollar yen. Dollar yen was not affected. Okay, dollar yen was not affected. It's still moving up. In fact, look at this. Let's take a look at the bigger picture. Okay, bring this down. Okay, see what it's doing right now is it's trying to break through a key area right across here. It's trying, okay? Just because it poked up, that doesn't mean that it's, again, some people look at that and go, oh, okay, all right, it's breaking through. And it still might. Okay, so let's look at everything else. I already see something I don't like, but look at this. Momentum is down. Okay, this is up. Trend is up. Price is above. These are above each other. They're widening. All that's good. All that's good. The only thing I'm a little bit concerned with is momentum is down. Trending down. Trending down. So on our list of things, we have 5 out of 6. Okay, this can be a fairly big one though, right? This could be a fairly big one. Okay, as we see, it's trending down. So are we about to do, like we just saw a minute ago, I can't remember even what pair we were on, are we about to get up here and roll over again, or are we going to continue to go higher? That's what you're looking at here. That is what you're looking at. You see, each time it gets up and gets just above here, it pushes itself back down. All the other factors are in our favor. So we got 5 out of 6. We have 5 out of 6. I would prefer 6 out of 6, but you got 5 out of 6. And then what I want to do is I also want to look real quick. Okay, since this started, we had a strong move. These are your impulses, right? Pulsed up, we pulled back. We pulsed up, we just based. Big pulse up, we pulled back. Smaller pulse, pulled back. Okay, you see that? It almost looks here like we might be running out of steam. Because here's back down here. Actually, I might even be able to go further. Yeah, actually it started over here. All right, so we started with a smaller impulse, a little bit bigger, smaller one. We had a pretty strong pullback. Then we had a big impulse, pullback, medium, big impulse, and now it looks like we might be trying to run out of some momentum here. You're trying to put the story together, right? That's what you're trying to do. And you guys see what concerns me here. See that? Even though price is going up, what do we call this? You guys remember, the ones who've been with me? Negative divergence. Negative divergence. So price is going up, momentum is going down. That typically, and not 100% of the time, that typically signifies you're running out of momentum and price may roll over. Okay, that's not 100% of the time, but this is an indicator that that could be happening. Okay, when momentum starts to go the other way, even though price is going up, momentum's going down, okay, you can look at that as a potential. Remember, we're trying to anticipate. Potentially, the market could roll over. So should I be super excited about a long here, even though we've got 5 out of the 6 factors? I don't think super excited is the right word. All right, we'll maybe come back over here. Let's take a quick look. Okay, so we're starting to get a little bit of a bounce, right, just above our support level here. A little bit of a bounce. Is this profit taking, right? Or is this going to be a reversal and are we going to start heading back up? Okay, still too early to tell. I mean, we're only 6 minutes into this candle. This is ES, right? But look at that nice drop that we got. Let's look here. So from where we broke, what did we say that was? 32.54 is what we used earlier, and it went as low as 32.23.25. So a little over a 30-point drop. Okay, a little over a 30-point drop. So that was a pretty healthy drop, right? Pretty healthy there. Okay, back over. Okay, still, you see this? Still, okay, we've got no momentum. And in fact, it's actually starting to look like it's starting to curl a little bit. Okay, so that's how you protect yourself. That's how you protect yourself. Let's go back up here. I'm just going to scroll through these really fast. Okay, nothing that I'm interested in there. Okay, this one, see the strong move down, and now it's trying to recover. Okay, so that's probably, again, as we were heading into London close, we were getting some drops on some of that stuff. Okay. All right. Okay, looks like this is trying to go lower out of this contracting range, but it's still not through here. Let me bring it up so you can see. Right, it still has to break through here. I can extend this across. Still got to get out of that. Still got to get out of that. We're below. Momentum is break. See, momentum was up. Now it's trying to break through. It's kind of sideways, but it's not going up anymore. Okay, we do have our above average volume. Price is below. The EMAs are starting to widen. Okay, if we can start to get some downward pressure here, okay, then we could be looking at a continuation of this downtrend. Okay, if we could get some downward pressure. And last thing I'm going to look at, Euro USD, and we're going to wrap this up. Okay, here we go. Turning. Now we're getting below. Let's see if they start to widen. Momentum to the downside, above average volume. Okay, now we're starting to put all the factors in our favor. We would know down here would be a target. I'll draw it in for you. Okay, down here, and where's my ruler? Just giving you an idea. Okay, about 15 pips from where price is now. Okay, and I'm not saying you should enter right now. I'm just saying from where it is now, there's about 15 pips down to this area here. Okay, because you see how we turned. Okay, we went lower low, lower high, lower low. It looks like we might be kind of trying to pull back over towards the 10. We're going to let the 10 catch up. Then if we start to get another move down, down in here is where you would be targeting. Okay, everyone. I hope everybody had a great Friday morning. Let's just pay close attention to what the market's doing here on ES. Okay, let's just see, was this just profit taking and now are they going to try to go lower again, right? Or are they going to try to reverse and start heading back up? Okay, those are the things you want to keep in your mind. As you can see here, momentum is still way, way down. Way down. We're below 40, so keep all these things in your mind. If this comes down and takes out the bottom of this, we're probably fairly likely to get down into here somewhere. Okay, so if you like to trade ES, could be some potential shorts. If you take this out, means a break and a hold. Okay, because if you look over here, not a whole lot that could stop you if you got the momentum rolling to get down into here. All right, I hope everybody enjoys their weekend. Make sure you give us a thumbs up, subscribe to the channel, and turn on that notifications bell. Come check us out in our room. Over the weekends, I typically put a lot of educational stuff in there on trading psychology, on strategies, on anything that I think can help you improve and become a more consistently profitable trader. That's simpletradinglife.com. Click on the free chat room button and come join us. We'd love to have you. And we'll see you in the room. Have a great weekend. Bye-bye.